welcome back, everybody, to the Today's Market Explained podcast and video series. I'm your host, Brian Castle, and as most folks know who watch this series, we do market commentaries a few times a month, and then we also do interviews with fascinating people in the economic world who give us updates on certain industries and processes in the business world, and it's interesting to learn a lot from these experts. And so we have one of those unique characters today. We've got Dane Sanders, and Dane is a managing director, an MD with Madison Street Capital in Chicago. Dane, hey, welcome to Today's Market Explained and 4-Star.
Thanks so much for having me, Brian, on this beautiful morning here in Chicago. Nice sunshine, so appreciate it. Thank you.
Absolutely. Well, Dane, I was impressed with your background, and I wanted to see if we could get an update on what's going on in the corporate finance world. And part of the reason is, we have been through a pretty rough year in 2022 in the economic world with inflation, and now there's layoffs, and looks like there's going to be a rough quarter earnings wise. And the capital markets functioning is really important. And when things slow down, capital formation slows down, and your companies aren't able to sell or buy or whatever. So, Dane, could you give us a little update on what's going on in the corporate finance world in the middle market area? Which is
sure. Sure. Happy to do so. Brian, this is based on what it is that I'm seeing and what we're seeing, at Madison Street. But we feel that 2023 is actually going to be a pretty good year, especially for M&A in the middle market. And here's why. You're right. We've gone through some pretty challenging years. And one of the things that we're seeing is companies that have continued to be viable. They've shown a high degree of resilience, right? So they might have their valuations. We're seeing those valuations soften a little bit, but we know that they've gotten lean. Okay, they've probably have gotten a great deal more efficient, and they've shown a great deal of grit, determination, and resilience. And so those companies today look very attractive to buyers that are out there. There is a lot of dry powder out there, so there's a lot of groups and investors and buyers that are looking to make acquisitions that have funds and have capital available that they want to put to work. And so it's a pretty good environment for some M&A activity. Now, the thing about it, Brian, is that the expectations have to be managed, right? I did say that the valuations have softened a little bit. So the business owners, they have to realize that. And our perspective has always been, let's get out in front of these transactions with enough time that we can kind of get everything teed up and go to market when it makes sense. So we're seeing some companies that were smart in doing that. And then we're seeing other companies that kind of delayed, bringing someone like myself or Madison Street in, want to get a deal done. And the number is going to be a little bit softer than what they might expect. So now they have a choice of, do I sell and maybe get not as much as what I wanted, or do I kind of restructure some things in my life that I thought I might be ready to start doing and have to stay in the business a little bit longer. But all in all, we feel that it's going to be a pretty good market. I can tell you exactly how everything works out. If we have another conversation on December 31st, I can tell you how everything played out.
Okay, good. We'll do that. And my sense of this too, and all our listeners have heard us talk about all the things that went on during the pandemic, and there was a ton of money out there. They were sending PPP loans and forgivable loans and other government sponsored money. So it's not like folks don't have capital. The question is, where does it go? And is that keeping the market kind of more afloat than in other economic downturns? You think there's so much money out there?
we're seeing that I do, but we're also seeing that, Brian, we're seeing that sunset a little bit, right? So they've kind of gone through that PP, the PPE money, and so we're seeing folks not able to drink at that trough as much as they had been, and so again, that's why we're seeing some of these groups that we work with that are looking to make acquisitions. They're seeing some great opportunities, and they're strongly, they're strong opportunities. One of the things that we saw, early on, 2020, 2021, we saw some, what you could say, easy pickings. These were some companies that were really having some stress, really saying we don't know how we're going to make it. And so they were more the easy pickings. Those, those fruits have pretty much been pretty well picked a little bit. So now you're seeing some companies that were a little bit stronger that were able to kind of grit their way through. Owners are thinking about, what do I want to see happen, now or in the next, 24, 18 to 24 months. And so we're seeing some opportunities, in the market to make some decent acquisitions.
Nice. Well, Dane, I obviously have been around the corporate finance world for many years, working with securities firms, although I've never been in corporate finance personally. But, clearly there's a lot of people who build companies, need to merge, sell, combine, buy companies. I mean, there's a lot of movement around, and that's capital formation is a big part of it. It does help, though, if you have an entrepreneurial spirit. Now, your background as an entrepreneur is quite interesting. Maybe you can share with us a little bit about your background that led you to Madison Street.
Sure, happy to do so, Brian. The pathway that I took is a little bit untraditional. So I had spent the first part of my career as a marketing and advertising guy. Had my own marketing consultancy, working with heavy industrial manufacturers. I did that by design. I knew as a single shingle operation, I couldn't go after the quote unquote sexy businesses. So
Right.
I worked with industrial manufacturers of all different sorts, kind of the small to medium sized ones. A gentleman who ran a investment banking shop asked me to help him develop kind of a marketing pitch to raise capital for a well-known regional fast food chain. I did that. We were successful in the raise. We raised, I think, about $6 million. And I said to him, I've got a lot of clients, industrial clients that are, I know they're always looking for capital and they're looking to make acquisitions and potentially sell. So I can start making those introductions for you. So long story short, started doing that. Started having more conversations with my clients about their capital structure and capital needs than it was about marketing and business strategy. And just one thing led to another over the years. That was probably about 6 or 7 years ago, and 2 different firms ago. But that was how I got to what it is that I do now. And really, my value add is working with clients to really understand what they're looking to achieve. The capital markets, that's our toolbox, if you will, of the different things that we can go in and do and utilize, but understanding what it is that they want to do, and then kind of walking with them side by side on that journey. I like to think of myself as a Sherpa, if you will, helping them to ascend the mountain to reach their summit, but helping them to navigate the pitfalls that they're certainly going to encounter if they don't have a Sherpa by their side that knows what those pitfalls are and kind of where those rough patches are. So that's the role that I play.
Excellent. So what are you telling entrepreneurs now? What kind of challenges are they dealing with to do, take a family business and get capital or sell that business to another company at this point?
Well, we're telling them that they have to do the right preparation. Okay. If they want to sell, some of the things that they need to start thinking about is, how is the business structured? Do I have, really well crafted financials? Are they strong? Am I heavily weighted in any particular sector? I'm a hockey fan, right? I'm here in Chicago. I'm a Blackhawks fan, right? And so there's a saying: you don't skate to where the puck is, you skate to where the puck's gonna be. And that's the same. That's the same approach that buyers take. So if a business or if an owner has a business that's in a certain industry that's doing really, really well today, but it's in an industry that's somewhat declining or something like that, the buyer, they might be killing it right now, Brian, but the buyer's going to be looking at it and saying, where are they going to be in 5 years, working with in a declining market or with a declining customer base or something like that. So one of the things I will tell them is, hey, let's take this time now to help flatten out that customer base, to start looking at some other sectors so that the purchase price is not deflated because you're heavily weighted in this one area. So those are some of the things that we start having a business owner thinking about. Do they have a strong management team, right? Do they have a strong management team? Many times the buyer's going to come in, they may not make a whole lot of changes to the management teams. They're going to want to see some really, really strong butts and some really, really strong seats to make sure that they can continue seamlessly with the operation of the business. So making sure that the management team of the business is strong. So those are some of the things that we talk about and help them to think about. And then again, just managing their expectation with respects to transaction price and transaction timing, how long it might take to actually get the deal done.
Nice. Now, you've been designated a most valuable partner to many of your clients. Is that a specific designation that you received?
I just like the fact that most valuable partner is also an MVP, right? So I kind of look at myself as being an MVP with the clients. But it's true, because they really are looking for a valuable partner. The things that I help them do in their business, and really, Brian, there's 4 things that I do and 4 things that we do as a firm. We're not sexy. We don't try to get cute. We've got 4 lanes. So we help our clients raise capital. Number 1, 2, and 3 is, helping them sell and helping them buy a business. And then we'll do valuations as number 4, right? So they're really looking for a partner to guide them and walk alongside them in any one of those 4 lanes. So being an MVP or most valuable partner is just how I like to position myself.
Nice. So what kinds of people buy the businesses from family-owned enterprises and other entrepreneurs? Who's out there buying these companies?
It might be a group that sees value as an add-on to a business that they've already got. They might be looking to gain access or entree into a certain market, or acquire certain technology that business has. So it really does vary. As a firm, we work with, I think we've got a pretty robust cohort of a little bit better than 1,300 investors and funding groups that we work with. And so you can imagine with that breadth of groups that we work with, there's a lot of different appetites for a lot of different reasons for a lot of different kinds of companies. That gives me a really strong toolbox to be able to utilize to find the right potential buyers or partners for our clients' businesses. And one of the things, Ron, that we like to do is create kind of an auction bidding war type of an environment for the business, right? So we craft a really compelling story. Then we go out and we put that story in front of interested parties that we know would have an interest in that business. It's not a scattershot approach, right? We're not taking that approach. It's very targeted, but it's very strategic. And we're putting it out against certain number of groups so that we can really start to get that market and that bidding war kind of in motion And that, of course, is going to increase the purchase price that our client's going to get.
Sure. So if you have a regular group of funding sources, that would mean that there are companies out there with capital always looking to buy companies in strategic industries or certain financial buyers. So there's a pattern to this, right? It's not just all one-off transactions. There are people that do these things regularly.
Absolutely, absolutely, and that's it's a living, breathing thing too, because that cohort's always, it's always changing, it's always morphing. We're always bringing new partners in that we find interesting, that are looking for some interesting things to see. And now our reputation in the industry is such that they know that we see some really great opportunities. So they're looking to align themselves with us to see what new and interesting thing that we can bring to the table for them to look at.
Nice. Dane, we've all heard the stories of entrepreneurs who start their businesses in the worst economic times. And, there's always a sense that when business is slowing down, everything slows down, but it often leads to some great innovation, like Oracle and Microsoft were founded right in the depths of the oil crisis in the 70s. And you wouldn't think that, right? You wouldn't think that anybody would take any risk when the whole economy is collapsing. It's not as bad now, but we're certainly going through a bit of a downturn. Do you think that leads to entrepreneurs taking risks, thinking, gee, this is a really good time. If I can start this business now, then I can certainly sustain it in good times if I can sustain it in bad times.
Oh, without a doubt. You're absolutely right. We see that quite a bit. Not so much as far as what we see, not so much are we seeing entrepreneurs starting businesses, because, we don't work with startups quite as much. We're not able to add as much value to them. Where we see that type of thinking and approach around is really in the kind of in the transactional deals that we do. So if a company is looking to make an acquisition, or if you're looking to do an equity stake, you would think that in a down market or depressed market, those things would slow down, and they do. However, when those transactions do occur, they're incredibly successful because they're really, really well thought out. You have go days where deals are just going, like gangbusters. They're good, and you want them all to be successful. But I'm sure some of those deals, in other firms, not ours, but in other firms, I'm sure some of those deals may go south. However, in this market, when deals do transact, they're really, really the right deal. They're really, really well thought out. They've had the time to be very, very pragmatic about it. And so everything matches up beautifully. And so those deals turn out to be incredibly, incredibly successful. So it always becomes a really, really good time in this market to get deals done. Obviously, the number of them aren't the volumes, the pure success and viability of the deals, those are off the charts in these markets.
Nice. So, Dane, when do entrepreneurs fail? I mean, we hear about all the successes. I did a lot of work in the angel world. Half those deals go bankrupt. When do entrepreneurs fail?
When they're, in my estimation, they fail when they're more in love with their product than what their product actually takes care of, right? So okay. I think that they have to, we've seen entrepreneurs fail when they've taken that approach of really, really falling in love with, whatever their product, service, or solution is, and they're not really that receptive to feedback around where there might be some softness or some holes, and then not acting on that appropriately, if at all, right? So that's there's other things that we see, not adapting to a changing market, sometimes going with the flavor of the day that's happening in the market. You can not adapt enough, or you can be changing and adapting, to the market too much, and kind of losing sight on what your core focus and your core business or product and solution is. So we see that. And I think there's one really, really important question, Brian, that business owners don't ask enough, right? I don't want to say they don't ask it at all. I don't know, but I don't see them asking enough. And here's the question. I think a lot of business owners, when they do some research and sample the market, they say, why did you choose us, right? Why did you decide to go with us? I think it's a fair question. It makes sense. But I think a bigger question, and maybe even a better question, is why do you stay with us? Why do you stay with us, right? Because that's where the real gold is, right? A lot of companies and a lot of people can get, pretty excited about trying something new and kind of liking what you offer. And well, we're going to go with company X because we like this or we like that. And that's great. But what makes you stay with company X when company Y is coming after you and company A is coming after you, but you've decided to stay with company X? Understanding that's gold right there. That's gold right there. And I don't see, it may be happening all the time. I'm just saying what I see. I don't see that question being asked enough.
Yeah. So by the time they get to you, they're looking to do a transaction. Where do entrepreneurs go for help, for guidance? The wisdom that you just provided us today. Of course, they could go to the 4-Star podcast and learn that. But where else could they go?
And they can certainly come to Dane Sanders at Madison Street Capital as well, right? Okay. But I think what I see is there's a lot of different groups that are out there, and I'm sure, Brian, you see a lot of different groups and peer groups and mastermind groups and things of that nature. So I think they go to a lot of those. That's what I've seen when we talk with the owner or the CEO of a company, and that's bottom line. That's who we have to ultimately and very quickly start to engage and interact with. But when we just go through, our discovery and just getting acquainted and getting to know them and having them get to know us, we start to find these things out. And we know that some of the decisions that they've made, good or bad, have come from the folks that they've met in these groups. So, these folks that they might play pickle or paddle or something like that with, that they're talking with, or maybe even golf or something like that. It's not incredibly strategic that they're getting any kind of real guidance, that we see. And that's why when they do engage with us, we're able to help them a great deal. We have other sources and resources that we bring in. I would tell everybody I like to provide a 360-degree solution for my clients, but honestly, I can only provide maybe about 20 of those degrees with what it is that I do. So I bring in myriad other folks in areas that I don't come anywhere near touching, but I understand what those needs are because of the conversations that I'm having with the owner. And I'm able to introduce a resource that is 10,000 miles away from what it is that I do. And that's how we can kind of build a cocoon around this business owner to help him or her advance and like I said before, reach their summit. As in my role as a Sherpa, help them reach their summit and plant their flag.
So, Dane, who starts all these companies? Is it traditional folks from the wealthy classes, or are entrepreneurs developed in a lot of areas where traditionally wouldn't be believed that their entrepreneurs would be? Who starts these companies?
I've seen it be both. I've seen it be both. I've seen it be the successful companies that we've worked with. I've seen individuals who had worked in another company or organization for a number of years, very talented, either see something that they felt that they could do better, or maybe saw some limitations that the owners of that company didn't want to address. And he or she said, I can address this and I can do something here and I'll start my own. And of course, through through attrition and through layoffs, right? So we know that the tech companies, and we've heard a lot in the news about tech companies laying off a lot of people. You can bet that there's going to be a number of those people who have gotten recently laid off from tech companies start some really innovative companies that are going to do quite well. So we've seen entrepreneurs become incredibly successful as a result of a separation.
So anybody can be an entrepreneur. You have to have a good idea, and then you have to find people that can join with you in your quest, and then get some funding. And so it really could be literally anyone could be in a.
Sure, but there's a part two of that statement.
Okay.
There's a part two of that statement, though, Brian. Yes, anyone can be an entrepreneur, but not everyone's going to be a successful entrepreneur, right?
Right.
So there's certainly a kind of a weeding out process that occurs to separate those that are entrepreneurs and those that become successful entrepreneurs. And the failure has nothing to do with it, because even the successful entrepreneurs are going to have a tremendous amount of failure. It's just how do they react and respond and adapt to that failure, and what do they learn and change from the failure, which will help them to gain success.
Great. But the message today is, if you're an entrepreneur and you do your homework and you work hard and you take the hard knocks, you can still succeed and build companies. And this is a good capital market to be doing that in, isn't it?
I believe it is. I believe a true word has not been spoken. Absolutely.
Excellent. Well, good. Well, Dane, this has been a great visit. Are there any other messages you'd like to send the company leaders and entrepreneurs of Chicagoland and the United States here today on the 4-Star Podcast? Any messages you'd like to send to them?
I would. And I thank you, Brian, for that opportunity. I would just share that one of the things that I have seen some of the most successful businesses that we work with do has been to talk to their employees, find out from their employees what's really going on in the business, because they know. Talk to your customer service people. Businesses will talk about, market research, and some are blessed with the financial resources to be able to go out and pay for market research. And there's nothing wrong with that. God bless market research. However, you've got your own market research if you've got someone answering the phone in your customer service area, because they're finding out what the complaints are. They're finding out what the good things are. They're finding out what people are asking about that they wish you had. They're finding out a lot of information. And a lot of times we don't see those individuals being utilized to help inform what could be some very, very transformative decisions within the business. Should the business owners or the leadership just talk to those individuals and talk to other folks about what they're seeing out there and the questions that they're getting and things of that nature. So I would leave them with that. Talk with the people of all levels in your organization and encourage them to be open and honest about what they're seeing and what they think could be better inside the business.
Well, that's great. Thanks, Dane, for that message to the entrepreneurs of the world. And if folks need to reach you, they can find you at Madison Street Capital in downtown Chicago. Is that right?
That's correct, sir.
Excellent. Well, good. Well, thanks. This has been a great visit, Dane. And it gives us confidence that the capital formation and capitalistic growth markets in America are still strong, and that there's guidance from leaders like you that can help combine companies, get financing, do valuations in all different parts of the transaction. So thanks for your leadership. And let's give a shout out to all the entrepreneurs out there that want to build companies and have great financial success in America. So
absolutely. Thanks so much for having me, Brian. It's been a joy to chat with you and your listeners today.
Thanks, Dane, and thanks everybody for being with us today. We'll be back again with another market commentary episode here very shortly. And all you entrepreneurs, go out there and make it happen. And good luck. Thanks for being with us today, everybody. Bye-bye now.